Happy New Year, everyone. I couldn't be more excited to be kicking off the new year with our Connect.ca Realty monthly newsletter. It's been a long time since we've been doing this newsletter, but I promise you in the new year, as a New Year's resolution, we'll be providing you with a market update every month where we're going to talk about the current market, the past market, our forecast for the future market. We'll be sharing expert opinions, expert advice, and different investment opportunities within our community. Thank you, everyone, for tuning in. Let's jump right in with our 2023 market recap. I'm not going to sugarcoat it. 2023 was a challenging market. It was challenging for investors, for real estate professionals. I've been doing this for about 20 years, and 2023 has turned out to be the most challenging market of all of the markets that I've been involved with. And, before I jump into this, what people have to remember is real estate is a cyclical investment. I mean, all investments are cyclical. Economies are cyclical. They're seasonal. But what happens is there's going to be a down market. And as a savvy investor, a good investor, you want to be able to sustain, be able to make it, weather that storm, so to speak, because on the other side of the storm, it is a beautiful, sunny place. And we all want to be there. So kudos to all of you who have, got through this year. And I think I've got some good news for you. And I'm very excited to see what's on the other side of this. So this year ended up very challenged with 4,236 sales, well below the 10-year average, which is around 6,900. MLS sales to new listing ratio, again, also below the 10-year average of about 68%. And 40% for 2023. Now, on the supply side, the market started as a seller's market in early 2023 and moved to a balanced market near the end of the year. So let's just unpack that a little bit. Going into 2023, interest rates were, the economy and people were feeling the high interest rates, and the market had pretty much hit a standstill. Going into 2023, we had 3 rate pauses, which people started coming off the sidelines and started going into the market again. So we had a huge shift in demand in the early parts of 2023, which saw price growth of anywhere from 5 to 15%, depending on the submarket of the GTA. So it started as a very strong market. Interest rates started going up again, and it sucked the life right out of the market. And at the end of the year, we ended up with MLS active listings of about 16,000, close to 17,000, which is just above the 10-year average of 13,000. And we ended up with, at the beginning of the year, we were just over a months of supply on the market. Right now, we're sitting at 4 months of supply. What that means is if the month of supply is currently sitting at 4, that means if no new listings were to hit the market, it would take 4 months to sell everything that is currently on the market. That means we're at about a balanced market, teetering towards a buyer's market, but it's definitely not a seller's market. And as you'll see in the current stats for December and looking into January, I think we're starting to move in the direction of a seller's market again. So average prices, condos got absolutely hammered this year. 416 condos have, historically been the strongest segment of Canadian real estate throughout the years. And it has taken an absolute hit over the last year to 2 years, due to COVID and all of the interest rate related reasons. But what that looks like for me, someone who has been following this market for over 50 years and investing in it for over 20 years, is that there is opportunity when the market is down. So we're going to focus on this year to get a recap, but we want to focus on the future and not get stuck on the details of the past. So we ended up condos in the 416 were down 4% year over year. And 905 was 1.1%. And the total ended up being about 3.1% below 2022 numbers, December 2022. Now, those of you who have worked with me, you know that I'm always talking about real estate as a long-term game. I have never got into business or got into sales to tell people that they are going to make money overnight. And what do I mean by overnight? I mean literally overnight or within the next 6, 12, even 24 months. Real estate has always been a long-term gain. It eliminates the risk and it makes real estate investing safe and very, very lucrative. So when you look at these numbers over the last year, it has been obviously very challenging. This is a blend of all unit types here and the GTA. So it ended up above 0.26% above last year, so year over year, the average price of all housing types. And the 3-year price increase was 13.21%. So when you're actually looking at this very challenging market we've had for the last few years, we've seen about 4.4% compounded yearly growth. Let me break that down further. So if the 3-year increase was 13.21%, as an investor, I could assume I put down 20%. So 20% with a 13.21% price appreciation actually brings you to a 66% return on investment. So about 21% year over year growth on your 20% down payment. There are not many investments anywhere that I know of that can consistently do that all the time. So look, when we look at real estate, we look at if the market is appreciated 4%, 5%. 4% for me is a very, very, very good return because that is a levered 4%. That 4% actually means a 60% on my investment over a 3-year period of time, or over 1 year, 4% means 20%. Very, very good returns. Now, if I look at the 5-year, I could break that down even further and you can see the returns are considerably higher. And, when I got into investing in the Toronto real estate market, and the same reasons why I'm investing in the Hamilton real estate market, I was looking at a market where REITs, where very sophisticated funds and investors were going to look for their very conservative returns, but they knew they were very consistent. So we kind of look at that as a blue chip market where you might go to a value market and there's a little bit more risk, but there might be more upside. But when you're looking at a market like Toronto has historically been, and what I'm seeing in Toronto and what other REITs and big institutional investors are seeing is that we're going to go into this market and we're going to see on average our 4 to 6% annualized return. But again, once you leverage that, which you can get as a real estate investor, which you cannot get with other investments, that looks more like a 20+% return every year. Month of inventory. So the good news, we started seeing this in December. It started leveling off, and then both low-rise and high-rise condos after reaching a peak started coming down in December. And I've got a lot more brighter news for December going into January going into the new year. The rental market was absolutely on fire. No surprise. We've got a housing supply issue. People need a place to live. That issue is not going to be fixed in probably my lifetime, but in the near future anyway. And we saw significant returns for investors and increases on rents. Now going into the end of the year, rents started pulling back a bit. They've always been seasonally adjusted in December, January, February, the winter months. So I do expect in the spring that we'll see rents continue to increase, again, due to supply and demand imbalances. RBC came out with this earlier in the year. They're predicting a massive shortage of rental stock in the GTA. Coming up in up until 2026, they expect it to actually quadruple. All right, so we got all of the fun out of the way, talking about how painful 2023 was, but let's really focus on the present and get excited for the future because that's what this is all about. We're going to take a look at a market overview, micro and macro. I'm going to fly through this. So I just want to remind everyone, real estate investing is not sophisticated. We help you at Connect make it simple, but it's really not rocket science. And a lot of people who sit on the sidelines and continue to analyze deals can often get caught up in a thing called analysis paralysis. And I speak to people all the time who wish they had bought 4 years ago, 5 years ago, even 1 year ago. And, this could be seen as the most challenging time for people currently investing in real estate, but at the same time, it's the most opportunistic time to actually invest in real estate. So I want to simplify it for you and look at the supply side and the demand side. And that is why I believe real estate in the GTA specifically is going to be incredibly good over the midterm and the long term. So what is supply and demand? Well, Webster's dictionary says the amount of goods and services that are available for people to buy compared to the amount of goods and services that people want to buy. if less of a product than the public wants is produced, the law of supply and demand says that more can be charged for that product. This is a fundamental law of nature. And let's look at what's happening in the real estate market. Again, let's think about the long term, because I don't know what it's going to be like for sure in a month or 3 months or 6 months. What I do know is there's opportunity now, and in the long term, it is going to be very fruitful to be investing now. So we're looking at a deficit. Canadian real estate is going to a massive shortage of housing right now. Canada's housing starts aren't keeping pace with population growth. This chart on the left shows you here that we had record immigration last year, more immigration than ever before at 1.2 million. So you can see that line drastically going up. And here with housing starts, you actually see low supply housing starts have decreased by 22% in November. This is a great slide here that highlights, this is for all of Canada, but what's really interesting, and I can pull up a very similar graph for Toronto as well, is that our construction industry for Canada has plateaued around 200,000 units a year. In the GTA, that has been around 30,000. So regardless if we had an incredible year of sales the year before or a terrible year, we're building roughly 30,000 new homes in the GTA every year. But at the same time, that need for housing is increasing drastically. So even if we were to bring population growth back to when I started investing, which was very appealing, it would still be a great, a city to GTA would be great to invest in, because there would be a shortage of housing. Now we're seeing a massive trajectory of immigration, both non-permanent and permanent residents. So, this is a very exciting time to be in the housing market. International student boom, that's been in the media a lot lately. Obviously, Canada has some of the leading schools in the world and North America, and markets like Hamilton and Toronto really capitalize on that. When we're talking about where I want to invest in a major metropolis where you've got public transit, you've got government spending, you've got infrastructure, but you also have universities, because this is a massive piece to the investment picture. When you could have that international demand, local Canadian demand for housing, it is always done incredibly well for investors. Steve Sareski, I don't personally know him, but I really love his content. He's a real estate professional from Vancouver and very analytical. This is one of his posts, staggering numbers. Over the last 24 months, we've added 954,000 new households across Canada, but only 399,000 new homes were completed. So what that means is we've added 954,000 new households. That means there's multiple people. The household formation is about 2%, just over 2% in the GTA. Anyway, I don't know what it is for all of Canada, but what that means is we need 954,000 new homes, and Canada's only built 399,000. This is an incredible slide. I have a few of them from Greywood. Greywood is one of the leaders in all of Canada, especially the Toronto condo market. Incredible developer building incredible product, and they have a lot of really smart people that work for them. So I was on one of their webinars a few weeks ago, and they have some incredible data that I wanted to share with you here. So Canada's population growth in 2023 is the highest growth rate on record since 1957. We had 1.2 million Canadians, as I showed you. But what's interesting is about 500,000 end up in Ontario, and about 250,000 end up in Toronto. Now, I know that at the same time, the household formation is around 2.1 people, and we're building about 30,000 new homes in the GTA every year. So let's look at this. Building industry constraints result in supply being unable to keep up with the demand. So this shows units estimated to be built in Ontario, 610,000 units needed in Ontario to be built in order for housing to be affordable, 1.5. Now let's talk about the GTA. That's where most of us are investing. Greywood estimates a current housing supply gap of approximately 159,000 units in the GTA. So that just goes and shows you that we've been accumulating this deficit for a very, very long time. And the need for housing continues to grow more and more every year. And that historically and fundamentally based on supply and demand drives prices up. Now, there's market externalities, if that's a proper word, but there are external market factors that obviously change the influence of pricing, and those come in the form of government policy or laws, tax laws, interest rates. And what will happen is the government will introduce these new things to try to control a market. And that happens. It has an incredibly positive effect on what they're trying to do when, they lower interest rates and the media starts talking negatively about real estate. It has the impact that they intended it to do. But let's talk about what's happening with rates in the future. So, this I created this slide about a week ago. It's actually changed quite a bit from now. Expectations are actually a further rate cut. So experts are expecting by about a 1.25% by the end of 2024. I know that has now changed to about 1.5% is the expectation. So that's significant. That's going to create a huge amount of demand that is just piling up on the sideline. They're going to come into the market as soon as rates start coming down. We already saw when rates plateaued earlier last year. This is very good news for anyone feeling the crunch, as am I. This is another great slide from our friends at Greywood. This is a very significant telling slide. So over the last 20 years, you can see the cyclical interest rate, government influence environment where the market actually reacts very quickly to it. And you'll see that when sales are hot, interest rates can go up and suck the life right out of sales. But you also see the exact same thing where interest rates drop and sales just start to skyrocket. So, at the core, we're sitting on a supply and demand situation here. And whatever we're seeing as market influences is really temporary, maneuvers by the government or by the economy. It's not a sustainable way. There's a fundamental supply and demand issue. And remember that, because that is going to be the story for a very long time in GTA real estate, especially. Real estate sentiment is on the rebound. I'm already seeing it. I have a lot of resale listings. We do a lot of resale here at Connect.ca. And I had, one particular listing for an example. I had one showing in about 2 months. Terrible. That was over October, November. On that unit, I've now received 2 offers. They're lowball offers. I'm seeing 2 of my other listings received offers, lowball offers. So we're seeing a ton of traffic and we're seeing a lot of offers now. Now, the first indication I have always seen in my long time doing this of a market turning is when the sharks start to swarm. So no one is looking for opportunity when it's really bad, but when things start to look better, and this happened early last year as well when the market had its uptick, you start seeing people looking for deals. So it is a very positive sign that those sharks are swarming, because on the other side of this, there's just a lot of fish and there's a lot of opportunity for sellers. So I am giving the advice to my sellers to hang in there. Let's not accept these lowball offers unless you have to, and let's give it a few more weeks, maybe even, if not a few more months. These are my key indicators and market prediction. We'll take a look at my crystal ball. Now, when I invest in real estate, I obviously look at the supply and demand fundamentals. I want to look at historical price growth. I want to look at infrastructure. I want to look at government spending. I want to look at transit. I want to look at the crystal ball, the future of the real estate market before I invest in it. And another thing that I like to look at are these 2 indicators. I call them the affordability gaps. And for someone investing in GTA real estate, Toronto real estate, these are very important. And fundamentally, I believe Toronto and the GTA are the best markets to invest in all of Toronto. That's where REITs put most of their money and most institutional investors. So I will always be an advocate of the GTA over any other market. A lot of people ask me about Calgary. I sent out a video recording of my experience investing in Calgary. It was not a good one. I think that is a very short-term, short-sighted market. So I'm very bullish on Ontario and markets like Hamilton, where you have major universities and transit, and Toronto. So let's look at the affordability gap of low rise versus high rise. Now, gaps are a leading indicator of what's to come for Toronto condos. That's mainly what I'm investing in and most of my clients. So let's look at it this way. If everyone could own a home, a low rise home, a detached home in Toronto, they would. But there becomes an affordability issue. They'd have a pool and all that stuff. But there becomes an affordability issue. And what happens is it pushes them to the high-rise market. So they have the option of moving out of Toronto to finding a low-rise detached home that they can afford, which some people do, but the majority of people stay where they live, work, and play. So when you look at the price between a detached home currently at 1.6 and a condo, I should say, at 709,000, that is a difference of roughly $917,000. That is the biggest affordability gap I have ever seen. And typically what happens is when people start coming back into the market is people go where it is most affordable. And then you'll start to see, historically, we've seen low rise even pull back as high rises come up, and that gap gets narrower, and then more people could afford low rise. So then the gap continuously goes like this over long periods of time. So I'm seeing an opportunity right here and these are indicators that I can't tell are a month or 6 months or a year, but this indicator is suggesting that there is opportunity right now in the Toronto condo market. The other thing I look at is the affordability gap for 416 versus 905. Now, this is quite interesting what I found with this data. So the reason why I look at this is if you can't find a low-rise home with a pool in Toronto, you can't afford a condo in downtown Toronto, you're probably going to move to the 905 because you work, play in Toronto, and you want to be close by. So people end up going to the 905. Now, what happens is demand goes up higher in the 905, prices start going up, and there's an affordability gap and it gets narrow. So what then tends to happen historically is that more demand comes back to the 416 because it's more affordable. It's not as much more expensive than the 905. And that's a really important trend to look at. Again, I don't know if this is a 1 month trend or a 6 month, but it's a really telling thing to look at throughout history. And interestingly enough, again, there's not a lot of sales data right now, so this could be a skewed number. But in November, the difference between 905 and 416 was a mere $31,000. So anyone wanting to buy a condo in November based on average prices probably would have bought in downtown Toronto. Now, it's interesting I say that because if you look at the December numbers here, the difference between condo prices in 416 and 905 was 84,000. So people probably noticed that gap, that affordability was very similar between downtown Toronto or Toronto condo prices and 905 condo prices. And that could be why, that gap kind of spread, because we're actually seeing prices increase month over month in Toronto. So before I actually jump into these key takeaways, this is hot off the press. As I went live, someone had sent me these stats, but it's really important for you guys to hear these. So the standalone December data showed seasonally adjusted home sales surging by 21% month over month, with some upward adjustments to the prior 5 months to boot. This represents the largest monthly increase since April of last year. This is all thanks to our friends at Edge Analytics, who provide incredible analytical data for the real estate market. And, on the supply side, this is the December data. The real story will be on the supply side. And here there was a very notable development in December. New listings in Toronto fell 13% month over month, the largest decline since February, and the second lowest reading for any December in the past 20 years. Here, once again, there are clear divergences between segments, with condos seeing listings 2% higher than last year, while single family saw 8% drop. All right, guys, so let's hear the key takeaways. Now, I'm going to give you my crystal ball projection of what 2024 looks like. But what I provided you was data from some incredible analysts, market data, historical market data from the Toronto Real Estate Board. So I think there really is a telling story. I, again, joke about the crystal ball. I don't have a crystal ball. What I can tell you is I'm very confident that anyone who invests today and we talk again in 5 years, you're going to be incredibly happy that you did, because you just made a whole bunch of money. And what else? And the other thing that I know is the majority of people will actually wait for prices to increase before they invest. And that's just the way humans are wired. I tend to do the same thing as well. To a certain extent. So let's look at the key takeaways. 2023 was a market to remember and forget, but we're turning a real corner. GTA real estate remains resilient, performs incredibly well over the long term. So that's where I looked at the 1 year growth, and then we looked at the 3 and the 5 year, and the story is the exact same if you look at over 10, 15, 20 years. Big shift in rate cut expectations. So that's big. I mean, that is hot off the press. I mean, people are projecting rates to come down by 1.5%, some by mid next year. We're already seeing rates with a 4 in front of them, which is, I think, a big reason why we're seeing people jump in the market. I'm seeing a lot of action in my listings right now. Supply and demand, unbelievable population growth meets actually falling supply. So not only are we seeing more people than housing being built, but the supply is actually dropping. It's a big problem. Repeat of spring 2023. So we all remember what happened in 2023. The market got very, very hot very quick, and we saw double-digit growth. So are we going to see Toronto home sales surge and new listings evaporate? We already started seeing that. And, you could buy now at a discount or pay a premium in the future. I just wanted to do a quick Connect update. So a lot is happening here. We are very excited. This has been a challenging year, but we planted a lot. And couldn't be more excited to announce that we have the Connect.ca international division, where we'll be managing sales for a Dubai developer, Azizi, one of the largest developers in Dubai. We'll be announcing some exciting news there soon. Dominican Republic. Dominican is a market I am very excited about. I'm personally investing. A number of my best clients have invested there as well. The market fundamentals in Dominican are very good. You can get mortgage financing. You can buy below market value and pre-construction. Cash flow is considerable, and I really enjoy it there. I think it's a really great market and place to be. And Turks and Caicos, we've got a project that we're currently working with a developer on there, and there's going to be more to come. But what's important is we vet all of these things. I have been looking to invest and get active in international markets now for many years. I have proudly, I'm able to say that I've invested in Dominican. I think this is one of the best markets that is outside of the GTA. And I think there's a tremendous amount of opportunity. Reach out to me or someone on my team. We'd love to chat further. And welcome to a new era. So we have proudly joined Royal LePage Signature. The amount of support from this incredible brokerage has been great. This is giving us an opportunity to be able to grow and expand and be able to service our clients, most importantly, in a better way on the resale side as well as the pre-construction side. So we couldn't be more excited. Guys, this was my first monthly update in a very long time. Please provide some feedback. Email me, call me. Let me know what you want to hear every month. I would love to do the research for you and give you my opinion on the market, but tell us what you want to hear. Thank you for sticking around. Everyone, have a wonderful 2024. I look forward to seeing you.